This is the Scrap Metal and Commodities Recycling Report by BENLEE Roll-Off and Open-Top Trailers and Raleigh Goldsboro Metal Recycling, March 14th, 2016. In this report, last week many prices stabilized with slight downward movement, but remain at somewhat higher prices than we have seen in the past year. Importantly, Goldman Sachs, Nucor Securities, and Credit Suisse, three major Wall Street firms, all wrote last week that some of the recent run-up in commodity prices has been too much, too fast. U.S. steel production declined slightly again last week after a solid 2-month rise. Tariffs on steel imports, strong car sales, and improved housing could have this rise a bit going forward, despite continued oil and gas drilling. Oil prices, which have been declining for 18 months, hit a new low of about $27 a barrel on January 20th, just about 7 weeks ago. Since then, prices have risen an extraordinary 45% in less than 2 months. Related, natural gas prices, while up a bit in recent days, hit a new 17-year low in the last week. Oil prices declines have led to the drilling rig count declining yet again last week. The oil rig count is now down an almost surreal 76% from where it was only 17 months ago. Scrap steel prices came up a bit, as we said last week. While there is news of increased flows at some scrap operations, with many yards actually having shut completely in the last 12 months, scrap metal supplies remain somewhat restricted. This could mean upward pressure on ferrous pricing in the weeks to come. Hot-rolled coil steel remained up a bit, and there should be more upward pressure on that as well in the coming weeks. Stainless steel scrap prices had a slight uptick, but on no real news. Copper prices were down a bit after a few weeks of increases. Copper mine closings are having their effect of restricting supplies, which are leading to price increases. The restricted copper supplies continue to be shown in dramatically lower levels of copper in warehouses around the world. Aluminum has come down a bit on no news. There probably will be little movement up or down on aluminum in the weeks to come. Unlike copper, though, aluminum inventories are actually up in recent weeks, which should keep downward pressure on prices. Chinese overall imports are down about 14% in February, which followed a 19% drop in January. As most all know, China imports major amounts of scrap steel and copper, so this major drop will keep prices under downward pressure. The largest steel company in the U.S., Nucor, has seen its stock price rise about 34% in recent weeks. This is due to new steel tariffs will limit imports, so U.S. steel mills will be able to charge more for their products and will sell more volume. In a major positive, Wall Street Dow Jones Industrial Average has risen almost 10% in the past month, and parts of the economy like air travel hit new all-time highs in 2015. Related, this spring, all projections are air travel will hit yet new all-time highs. The European Union, known as the EU, is 28 European countries that work together for banking and other government rules and regulations. Last week, they announced major financial stimulus actions to increase their economic growth. This will help add upward pressure on commodity prices. Lastly, Jack Welch, the ex-CEO of GE, who is now a management consultant, was on CNBC last week. He said that after seeing a slow end of last year, he believes the economy is now doing well as auto sales hit new records and housing is getting stronger. These moves will help put upward pressure on commodity prices. With that, we hope all have a safe and profitable week. My name is Greg Brown.